Good morning, everyone. Let's get some charts up here. Happy Friday. Okay, so the indecision just continues. Everything keeps coming, whether it's these financials now, new coronavirus fears. And I think we'll just see where today ends. Hopefully, we're not going to be sitting here watching the paint dry as we start with this little move lower, not really doing much damage. Excuse me. So, the move down that occurred earlier in the week came down, you can see right on the 200, the red line right there, and began to rebuild. And this is exactly what we like to see for a counter trend trade. Anyway, could be with a trend trade, something that pulls back. Like over here, prices were in an uptrend. So the idea here is when prices move down sharply. So this move down here could have looked something like this, where things drop. When you get this wide range bar, obviously that one's not as big. We know that there's been a momentum move in intraday in the smaller time frames, which creates a price void. So right here, you see vertical suggesting the end of the move, whereas this was trending, you can see, and then it becomes climactic. So if you're a climactic trader, like you like those kind of plays, you have to be nimble. Sometimes they make significant moves, but waiting for some kind of price action like this, where it dips down and comes back up, and they don't always look like that, but you get the general idea where you get this side, you could say it's a head and shoulders bottom, but it happens in so many different ways. I like to tell everybody, look, it doesn't have to be the perfect way, maybe that you saw in a book or on a website or someone showed. It can happen in an endless number of ways. And here we had this bottoming tail bar here. Yes, you should hear me. Yeah, we'll get to SPX, guys. Good morning. Good morning. We're there in YouTube land. So we had that bottoming kind of price action. And then yesterday, there was like this indecision. Is it going to go back down one more time? And then it eventually cleared the highs and we got the spike to the upside. So let's get rid of some of the lines here. And at that point, I guess other than the financial news, stress tests, so on and so forth, with these stocks gapping down, and anyone that is any of those credit spreads, our factory work when something gaps like this is to wait at least around 30 minutes, but Dan will update accordingly. We'll see how things look after 30 minutes or so. So here's this wide range bar. Yesterday, prices took off out of this trading range here. And it looked like they could get up here, but then it got later in the day and traders, whatever, get more hesitant. It's just not popping. Anyway, so where does that leave us? Well, the idea was it could get up into this area. Now we're not so sure. And so master trader method is to say objectively, maybe if it's not going to get there, what might happen? Well, it forms a pivot. That's why these things are marked PH, pivot high, pivot low, which is nothing more than the software saying, are there 3 higher lows to the left and the right, or 3 lower highs to the left and the right? That's all that does. And then our job is to recognize them. So once that pivot high formed, it created a resistance area where potentially price traders would sell into. Now, based on the bottoming action here, pullback should be buyable, and the risk with buying a shallow pullback like that is the resistance area that is so close at hand that traders are going to be there. But with a bottoming type of price action, and this is not this, because over here it was in an uptrend. Over here it's in a sideways trend and questionable as to which way it's going to go. So now sellers showed up at that pivot high. And now once this bar is done over here, you get a third one, you're going to get another pivot high. So you can say, well, is that a head and shoulders top? Well, whatever. Who cares what you call it? Sellers keep coming in at the same spot. It broke this pivot low. Support is right here. So the downside would appear to be limited for now. So if it should break down here, I think we're going to be stuck kind of, unless things get out of hand, I think we're going to be stuck, watching the paint dry here with this bottoming tail bar. I don't, unless things get out of hand to break that low, but, Friday afternoon, unless some news comes out. I mean, that's my takeaway for the moment. Now, the same way that this is holding, right, or created this resistance area, it created this support area. So if this could actually hold this, right, let's assume it comes down or whatever in this area, it could hold this. Now we've got this upper level trading range going on. And so now we're sitting on our hands, now you can apply this to a stock. The interpretation is the same. I'm just explaining you the price pattern analysis here. So we're sitting here, this is an hourly chart. If we saw this on a daily chart or a weekly chart, my point is the interpretation is the same. We're sitting here waiting. And now if they can hold here and it starts coming back up and rattling around, we start thinking it's going to go higher. Higher to where? Well, maybe finally we get up to here, and so on. And we step by step factory work as to our interpretation of, we put bar by bar analysis in the context of the structure of what preceded it and multiple time frames. So as we look at the weekly time frame and longer term perspective here, we've just got an inside week. So we've just spent, the last 4 days and maybe today going nowhere. Okay. So we'll see how far this gets and where it ends at the end of the day. Ends down here. Well, next week, expectation is there. Closes at the high. Well, if it can clear that, then we look for it to go higher and a red bar ignored. All right, let's continue. And all right, the stocks, Dan will take a look at those using YouTube. So Dan, they're going to look at Amazon, which is gapping up here, and Groupon. Okay. Qs. And now we're going to see similar situations. Now that you've got the takeaway as to the interpretation of how we look at the charts in a systematic way, you can apply it to anything. So we don't have the exact same situation, but a similar situation where this didn't come up and make a pivot, but it created this resistance and then it went down, right? It didn't have 3 to the left, but we know what's going on there. Look at the topping tail. When it went up there, it came back in again. It dropped. It hit this minor support. It popped back up, and now we're kind of just rattling around, waiting to see what it's going to do. As we get into the day, the deeper it gets into the bottoming tail bar, the more it begins to negate it. The same way with the red bar. Well, look at this one here. That was a big, ugly red bar. And the factory work says the deeper it gets and closes into the signal bar, the greater the potential to negate it. So here, this move up into the red bar got about halfway. From our point of view, we say that's okay. Ideally, it would have kept going down for the bearish bias, but that's okay. It hasn't negated the red bar yet. We go back to the S&Ps, do the same thing, even less so. You can see I put that line there yesterday pre-market. So now the same thing. How far down does it go into the bottoming tail bar? And overall, we're in a trading range. And we're just here in a range of chop this week. And we didn't need any stochastics, Ichikumi clouds, VWAPs, or any other fancy stuff to understand what's going on here. YM, the weaker, even a little less so into the red bar. Right? So same story. You see the same hourly pattern. Really no different, no more to add to it other than monitor these and see what's going to happen. And here's the Russell. And same pattern, pivot, lower high, holding here so far, came deeper into the support area. So the concept of relative strength and relative weakness. Just look at the chart. You remember the other charts we looked at, they poked up and they came down to the top of the range. This is poking down deeper into the range. This is showing relative weakness. You can see it's more of a messy pattern here, and so on. Bonds here are up a bit today, kind of grinding up into this larger resistance area over there. So lots of uncertainty everywhere. Prices fell down. They come down you look to the left, down into some support. They grind up into the resistance, and here we go. Oil. So momentum is slowing down here. Why? Well, maybe just because it's had a decent run, but and how do I know momentum is slowing down? Well, look at this momentum. Here's the blast off the low. There's another one. A little rounding top, red bar ignored. Good momentum again. Pullback. And now look at the distance. Look at the distance between the highs and now. And this is where your indicator people are like, oh, look at the bearish divergence, how it told the tell of what was going to happen. If you can just recognize the distance between highs, you can recognize momentum slowing down. And you don't have to have any of this on the chart here, on the bottom of the chart, confusing the hell out of you. And gold. This just kind of just waiting there. It broke out. And I think it's just waiting for the market, if it's going to happen, to cave in to some extent so gold can take off. It's cleared these highs, so now it's just sitting there waiting. And we know that it's got room. Well, it's been sitting here under that level, going to the monthly chart there. Been sitting there at this level, but holding up bullishly, building a new launching pad, which suggests it could head up to the next whole number. Well, once it clears 1,800, it should be able to get up to 2,000. So looking for that. And lastly, our transports, which we always monitor, they're just a mess. And what you find is not just in the transports, but in the gappers, where you've got patterns similar to this, where they came down, some made a lower high and then the reversal like that, which looks like they could go up. There's a lot of things that are gapping down into this green bar. So, in the weekly charts looking as they are, right, it's kind of gives you a bit of a bias that sure prices can come down some more. So we're going to start today, I said, relatively neutral. You see where the S&Ps are, kind of in the middle of the range, and SPX. At a minimum, we want to get below yesterday's low, and the safe thing would be above the red bar's high. So yesterday's low obviously would put us down below here, because if it breaks this, right, we don't know if it's going to do that, but if it breaks this, we want to have room where the next level of buyers are going to step up. And it's, if it starts moving up, there are going to be sellers up here. So if we can find premium up above here, we should be safe, and premium down below here, we should be safe. And so unless we get new information, meaning maybe a pullback and retest something up or down here, we've got void below here and void above there. So getting within these areas, kind of what I call the danger zone. So everybody pick their own, but time is on your side today. So We'll review a little later in the room. All yours, Dan.
Yeah, I think that was a good song. Time is on your side. All right, let's take a look at opens. Now, our only problem child today, and let me just talk about banks. Is it Rolling Stones? Thanks. All right, so yesterday well, let's start with the spiders. We had these inverse head and shoulders all over the place. We had a bearish bias at the open because of the gap down, made a new low. We were hoping to get a measured move down. Turned out to be a breakdown failure, head and shoulders. And it was the banks who got the market going yesterday. And that was right here. It was the release of the bank stress tests. So we searched every bank in the KRE and XLF. We found a couple we liked and a couple put spreads, and then we did a half lot of Morgan, which was actually up nicely this morning. We did a half lot there and a half lot of E-Trade. Same sector, even though it's not a bank, but this one's holding well. And because of the news movement, I was telling people, similar to a Fed announcement, that I always like to see if there is follow through the next day. So that is why we only did a half lot on those two. And believe it or not, the rest of the over 130 stocks I looked at, there's no patterns. The only two I liked was what I just showed you, Morgan and E-Trade. But I hope everyone understands the lesson I was saying of news event. I told you people would be on TV talking about the good, bad, the ugly, and now we're gapping. The banks are gapping down. So Goldman is our only problem child today. It's not gapping under our stop yet, but that's an ugly gap. That's can't say it's deep into that bar. It's ugly. So the pre-market lows yesterday, they're at 197. Hopefully that would hold. So we're going to move our stop to 30-minute low and just go into hopeful intelligence hope mode here that it holds for 6.5 hours. That's all we need. So that's Goldman. We sold one on Citigroup down, but that one's not in danger because see this little gap down relative to the whole day's range is fine. All right, continuing APT, we have a put spread that expires today. A CBS, a call spread for next week. And I'm at Morgan. We have a put spread for next week also, and that one's fine also. And finally, RAD, R-A-D. We did a put spread yesterday on the earnings gap in strength. All right, let me go real quick here. On our swing and options trader, AON put spread, BBY covered call, and you can roll out the calls for next week. Cato, short stock, CSX, short stock, ETFC I mentioned, FISV call spread. Under the low, that's a 1, 2, 3. Under the low, that looks good. Add it here, keep a closer look on it. All right, let me finish these. FSCT. Now we're short stock, and I've tightened the stop. GDX put spread. H Hilton debit, a put debit spread. Here short put. Morgan we mentioned. Nikola put spread. Pfizer short stock, and Southern short stock. All right, so everything's totally fine except Goldman. And the news that came out was, and I don't know why the Fed would do that to traders, not release the information during market hours, but apparently it was released after the market that Oh, Goldman is the stress test is the worst of the group. I just don't get it. Why? I don't understand the delay in that at all. But I'm not a politician. All right, YouTube's asking about Amazon. We had a call spread yesterday, and you remember right here when the market started moving? Do y'all remember that? I said, let's take our small gain and not have a headache on our hands, because this was a reverse head and shoulders also. The entry was totally perfect. I mean, there's a 180 reversal on the daily continuation. The trade review was perfect, and trade review on getting out was perfect. So now, as a new opportunity, it's actually extended, right? Because pretend it was still trading. This is a climactic sell setup at resistance, but it's 100% retracement again, so it's strong. But there's no setup right now. Groupon is bearish consolidation on the bottom part of this ugly WRB. It's a bear 1, 2, 3 on the weekly. It's opening flat. I see absolutely nothing to do with that, except, maybe shorted under these lows right here, but it's a mess. Oh, Alex, they never disclosed. Oh, I don't know if that's true, Alex, because I remember after the financial crisis and they went through this, I clearly remember seeing a journal article about the banks that passed or whatever. All right, whatever. But then how did the news come out last night? I don't know. I'm not going to worry about it right now. Let's continue. Let's continue here now with gappers. SGNX 32 and change. So your gap, it's a bullish gap, but it's gap and resistance. Weekly and monthly are a mess. So I don't know what to do with it. Remember, I'm just looking for tier 1 setups. Tier 1s are, I think of it as they're in the batter's box. They are ready to go to, that's a good analogy. They're in the batter's box. That's a tier 1. American Airlines have still total junk, but I just saw the news headline that July 1, American's gonna stop their 70% load cap. But nothing there. See, I just use news to bring me to a chart to see if there's any opportunity. Ludwig, LHCG. Yes, I mean, it had, well, the volume's 300,000. I would see it's extended now. It's extended. So this would be an ideal 30-minute high trade. So LHCG, yeah, I have it here on my list. It's right up here. Yeah. All right, TBIO gapping down 29. So it's a bearish gap, but no pattern. So I'm just going to take it off my list. Adam, CLGX. Yep, that was the next one on my list. Adam, you tell me what you are thinking. To me, the gap is too excessive. I don't know what you're thinking. Are you thinking to buy it here? And if so, where's your stop? Are you thinking to short it here? It's just, I have absolutely no desire to do anything with that thing right now, because there's just not a good setup. Yeah, no, we love pro gaps and bullish gaps that don't gap too much. We like them. I mean, I'll go through here and I do this every single morning. I tell you the ones that I love. That's what we do here. GPS 1193. Okay, so this is actually a bullish one, because it's gapping it's gapping right over these prior highs, creating a big shock. I mean, it's still the top end of resistance, but target would be, 13 to 1350. So I'm going to put that here. So GPS, I like substantially better than that other one, the ZGNX. Now look at the 5-minute chart here too. This is a very bullish 5-minute chart. Yeah, I saw on the news that, what was it, Kanye West is, they're promoting his clothes line. Mr. Big, it's a big bullish gap, but it's still excessive, but maybe it sets up. Oh, they spun off Old Navy. Okay. Hey, Rich, and also a new person earlier. If you can put your drop down to all panelists and attendees. I mean, this is a bullish gap, but I'll keep it on my list. Maybe it sets up in 3, 4, 5 days. Maybe it pulls in, maybe it goes sideways. But as of today, right now, it's excessive, and it's already run another $3 pre-market. Rich is asking about crust. I don't see where it's gapping, and it could be okay for a day trade. I like this consolidation and broke out. Albertson starts trading. Okay. Yeah, thanks, Barrett. I like watching IPOs. Oh, Upwork. Yes, this was on our list from yesterday. Yes. Now, see, this one gapped up, and this is a buy setup pre-market to support. So this looks fantastic if it holds right here. So let's, I have Goldman in another window, so I'm going to put Upwork here. iRobot. $79.50. All right, let's keep an eye on this for a possible call spread. INO, what a beautiful, beautiful gap breakout trade. Rowitz asking about what is a 30-minute low mean. And for those subscribers, we have beautiful, I got to keep reminding people, because I know it's human nature. Come on, I just want to start trading. Don't make me go look at resources. Here, I'll tell you what a 30-minute high is, just, for example. Let's say this was the real market today and it gapped up, so that you wait 30 minutes. So that's 2 15-minute bars. You wait 30 minutes and 30-minute high is 34.76. Same example, 30-minute low would be 32.19. I mean, a penny under the low. So that's all. So on Goldman, we're going to let it trade for 30 minutes, and then we're going to stop out. Our new stop is 1 penny under the low. Look at GPS moving right here. Yeah, that was a nice gapper. My bill didn't go off. This year the Fed will, it's not going to pass or fail banks. Oh, maybe I misunderstood you earlier. So you're saying this year, in the past, they did grade them, but you're saying this year they're not going to grade them? VXRT. But how did the news get out that they were the worst? Okay. But was it a leak that somebody said Goldman was the worst? Debbie. Oh, TJ. Oh, well, yeah, was TJ in this? Wow. What an amazing gap. Yeah, somebody emailed me saying the news was Goldman was the worst of the pack. All right, glancing at opens. Hey, our BBY. BBY is doing well. See if this was the one that we rolled. Fake news, really? Well, but the chart kind of, yeah, we rolled BBY, but the chart surely suggests, Alex, that's the nastiest gap I've seen in banks this morning. So it doesn't sound like fake news to me. All right, CME, I'm just glancing at all our opens. Everything is fine. Space, no. All right, all our opens are fine. I mean, except Golden being in the infirmary, but we have a plan with him. Let me continue here. AXSM. Look at Ludwig, LHCG. Here's a nice gapper. Look. Now, notice how this gap is not too big. And it's a buy setup on the weekly. This looks great. Let's wait 5 minutes. Market's still coming in. This will be a great 5-minute high trade. Stop yesterday's low. That's a good gapper right there. See, it's not too big. It's from a bullish consolidation. I got bullish weekly. Oh, that sounds like can somebody tell me, is this a bio? Just those letters have the ring of it. Okay, so we got GPS, this. Yeah, because I don't know, for some reason, I can kind of tell by just looking at the symbols. All right, GPS now, the gap's too big for me. I mean, it needs to settle down. This was on our list from yesterday. Or no, McGraw, you emailed me this. A W pattern McGraw. I don't know why there's no volume here, but